right, guys, we'll go ahead and get started. Thank you guys for joining us this afternoon, this morning, this evening, depending on where you are zooming in from. Appreciate you guys jumping on. Like George said, we'll talk about our income fund today. We're super excited about this opportunity. We've been deploying it, been doing monthly distributions. If you're already invested in it, you would have received a distribution sometime this week. We're sending those out every month. So we've created this vehicle for investors to get in with us and participate in a great vehicle here. So in disclosure, this is a 506c, so this is for accredited investors only. Today, I'm going to talk a little bit about the team, properties we own, our processes, why we think we'll outperform the market, our competition, insight into our streamlined approach, how we're handling everything. The common tenants and toilets, that's absolutely not what you will be involved in. Heavy lift renovations, property repositioning, while you're enjoying passive income. Talk about the monthly cash flow distributions, and how we're able to achieve this 14.5% preferred annual return, which is double the S&P 500 average and zero volatility in the position that it's in. So I'll be handing this off to George to talk about one of the most important pieces to any investment thesis, no matter what you're investing in. Who is leading that fund is one of the most important pieces. So I will hand that over to George to talk about our team here.
Yep. Thanks, Brian. So a little bit about Elevate and how we came about. So myself and Eric, we were the founders of Elevate. We've been business partners for about 17 years now. We both left our corporate jobs and started doing real estate full time about 17 years ago. And we did everything you could think of in the single family space for several years. Began to scale a lot of fix and flips and started doing some new construction as well. In doing that, we brought the construction part in-house. We found it very difficult to scale and find enough good contractors to do that. So that was about a year, maybe 2 years after we started doing real estate full time. So we've had the construction arm for about 14 years now. And then as we went on into that journey, we kept doing larger and larger properties, started doing some small multifamily. And then about 7 years ago, really got turned on to apartments and more of the 100+ unit properties and the scale that brought, just acquiring one of those properties. And we really put all our focus towards that, started building out what you see here as the Elevate team. We brought on Brian as a partner in the company, and then started bringing on really great team members like Mina that's on this call as well. And then we've got Nick, who is amazing when it comes to analyzing these deals and finding really solid deals. And then we've got the management arm. So a few years back, kind of the same thing we went through with the construction. We realized that as we continue to scale, it was very important to be vertically integrated and be able to control the operations as much as possible. So that's when we decided to start the management arm. And we brought on Tessa and Mike, who have years and years of experience in property management. And it's been amazing so far. Every property that we've taken over and done the management, we've seen night and day comparison. You can see some of the numbers there. Combined, we've got easily over 45 years of experience in real estate. We've acquired little bit over 7,100 units. We've exited almost 1,800 at this point. All the deals we've exited, our average IRR to our investors is a little bit over 42%. And right now, as it stands, we've got about 600 million in assets under management. Um, Once again, I just want to stress that we focus a lot on building out an excellent team, and that's the reason we've been able to do what we do, and we'll continue to scale and continue to grow our multifamily portfolio. You can go to the next slide there. Yeah. So I talked a little bit about being vertically integrated and how important we think that is to the success of our portfolio and our deals. So Elevate Commercial Investment Group, that is the entity that we purchase these properties under. That is the real estate arm. And then we have J&T Construction, which is the construction arm, and we do all the renovations through the construction team and the team we've built out there. And then we've got Elevate Real Estate Management, which is the property management arm. So having all those facets really gives us the speed and the confidence that we can execute business plans on these apartments. And yeah, like I said, it's been the reason we have that has led to a lot of the success we've had. So investment overview, we're going to start to kind of dig in and tell you a little bit about what we have here to offer to the investors, and I'm going to hand it right back to Brian to get that started.
Yeah, so what exactly is the income fund or the MFCI fund? This is a preferred equity vehicle that we are deploying in existing assets where we are sitting above common equity right here. You can see at the top here, but below senior debt and the capital stack. Senior debt getting 6 to 8%, depending on who your lender is. Common equity, depending on the deal, high as what you saw on that previous slide of what we were able to achieve. And as low as, nothing here. Here in the middle, we're able to charge this 14.5%, where we're theoretically helping this common equity get either above these returns or a better positioning on their property. And we'll talk more about how we're strategically placing that kind of criteria. But this is a preferred equity vehicle where we have a set preferred rate of return, 14.5%. That is annualized, where half of that is paid current. So 7.25% is paid current. So you're getting monthly cash flow. So if you were to invest today or next week, your first cash flow distribution would be July 15th. So, and then you would get your next cash flow distribution August 15th. We're placing these in existing assets. They're not new acquisitions, although we have historically gotten preferred equity on new acquisitions. So we have a lot of familiarity with this preferred equity vehicle as something that we've used ourselves on newer acquisitions when there's low leverage and we want to boost the returns or get more capital. So we've seen the vehicle and we've worked with other preferred equity partners to really be able to put this together. So this will be on existing assets. So what we like about that is there's less acquisition risk. The due diligence has already been performed. The property has already been quote unquote seasoned. So we see what's going on at the property. We can see now that there's been ownership on there. You have a clear picture to be able to project out that business plan. And the big thing there is it's a shorter hold period. So, I'll be investing in real estate for the next 80 years or however long I live, and my son will be investing, and I'll be investing in real estate forever. But in this hold period, is a short period of time where we can deploy that and then give it back to our investors. So I think, theoretically we'll probably be close to that 3-year mark. But we very well, depending on the market, could exit in 2 years. We have this 4 years in here just in case. We need to have it out there longer. I would be ready to have your money deployed for 4 years, but we very well could exit this sooner. Because these are in existing deals, it's going to be net of any fees. We, as a fund manager, are not receiving any sort of compensation until this preferred rate of return is hit. There's no fees on this. This is all going straight into the property. So every dollar is going towards the property. So there's a huge level of alignment with our investors on this one. So how does that shake out to you as an investor? Here's our
Sorry, Brian.
100,000.
Sorry, before you keep moving forward, just wanted to mention if anybody's go ahead and put it in. To
There's that internet rock wall.
Yeah, I believe he's having some bad internet. I'm pretty sure what he
you're
was
back.
saying
No, I
was if
see
you
it.
have any,
Yeah, you're good now.
if you guys have
Can
any
you hear me?
questions, just drop them in the chat.
Yeah, you're good now.
Okay. Yeah, that's what I was saying. At any point you got questions, go ahead and drop it in the Q&A. Just wanted to stress that. We'd like to get all the questions answered. Can you guys hear me still? Yes. Okay, good.
Yeah, you're good. Yeah.
Say, Brian, you may want to, very long. So we do encourage you to take action. We're thinking probably in the next few months, we may be closing this. Even the opportunity and the deals that we're seeing, there's only going to be a small window for us to be able to come in.
Yeah. Yeah, and we have seen so this is the most common investment into the fund. So we're putting this, for example, there are different couple share classes, which we'll go over here on the next slide. So what this looks like to you, if you're to hypothetically invest $100,000, like George and myself are also co-investing in this deal, your total interest is 14.5%, where 7.25% is paid throughout the life of it, and then 7.25% is accrued and paid on the back end. So what that looks like to you is if you're investing $100,000, you're getting $14,500 a year here, where 7,250 is paid on the front end, but at the same time it's accruing. So here's what that looks like monthly. $100,000 you invest. If you invested $100,000 today, you would receive your first distribution on the 15th July of $604. So that would be your monthly distribution. You would get that again in August and September, October, and through the life of it. And now at the same time that you're getting that monthly distribution, it is also accruing by that same amount. So if you were to deploy it for 1 month, we sold the property in 1 month, you got in and somehow someone had a 1031 and they really needed to buy something, and theoretically we sold it next month, we would then pay your accrued interest at that time too. So we would have already distributed 604, but then we would also owe you that other 604 plus your initial investment. So it's a really competitive preferred return, 14.5%. Usually you're seeing much lower for any kind of syndications or any kind of other investment vehicles, where you're lower risk investment vehicles. So here I talk about the different share classes. So for $100,000, it's 14.5% preferred return, 7.25% paid current, 7.25% accrued. We have 2 other options for our larger check writers who have money sitting in a money market account or sitting in a low interest bearing account, we have $500,000 where you're getting 16% preferred return, 8% is current and 8% is accrued. And then we have the $1 million investment where 18% is preferred, 9% accrued, current, and 9% accrued. So currently we have investors in each one of these share classes. Just a larger incentive for some of our larger check writers to place that type of money in the deal. So here's an example of a funded deal. Below is a structure of the deal. We're coming in with this preferred equity, and we're sitting in at just under 65% debt to our 64% on loan to cost here. So we have almost $20 million sitting behind our approximately $4 million placement into this asset. This is going to be deployed for 3 years on this asset. So really talking about the de-risking of the fund. So we really like it because of its capital stack. So that picture of the Empire State Building that we had earlier, this is painting that picture in real-time numbers for you on how that looks. So this property that has, nearly $56 million in it, your last dollar is at $36 million. So after $4 million are deployed into this property to improve it, to improve operations, to get it to a point where it can be not having to need a cash out, or where most properties are being cash in refinances right now, it would have to sell for $36 million just for you to get your last dollars in, when this property has $56 million approximately into it. So we really like the capital stack and the positioning of the deal on a risk adjusted basis for our investors. Yeah, I'll hand it back over to George here to talk more about specifics on the opportunity.
Yeah, so these are some reasons why we really like this opportunity. Some of it, Brian has touched on it, but the monthly cash flow I think is great. Like I mentioned, we've been distributing every month to our investors. We haven't missed a month. We don't plan on missing a month. It's like clockwork. And then as far as comparing this to maybe what you would get in a high yield savings account or CD, it's much higher than what you can get there. So, to me, it's really a game changer. Once you get your money working for you and you're getting some pretty generous returns, and we're talking about 100% passive, right? We're doing all the work here. Then the capital stack, I think Brian really drilled that in, so I don't think I need to say much there other than, we're making sure that we're coming in a pretty safe position on the capital stack. And then inflation, I think that's obviously been a big topic. If you don't get your money working for you and you kind of just have your money sitting there, inflation's going to kill you. The Fed is talking about getting it down to 2%. I just don't see that happening, and yeah, I just don't see them getting there. So definitely getting your money working for you is an important one. Go to the next slide there, Brian. Yeah. So how do we determine, what deals we're going to fund from the fund? We're going to put the deal sponsor and what that team looks like and what their experience is. That's the first thing we look at. Then we look at the market. We want to make sure it's a growth market. Can you guys hear me?
Yeah, you cut out there just for a second.
Okay. So the second one is the market. We want to make sure the property is located in a growth market that is has a growing economy, and that we feel good about it, and then that the business plan has a clear path forward. So that's very important as well. And then I'm going to go into a little more detail on each of these in the next 3 slides.
Yeah, and these all go hand in hand. You know, theoretically, a good deal sponsor is picking a good growth market and having a clear path forward and business plan. So these all kind of are intertwined with each other, and we're part of that process, and with all these funds that we're deploying in these assets. So George can talk about that here too.
Yeah, so the first one, like we mentioned, the actual deal sponsor. So we want to analyze their track record, make sure that they've been able to perform on other assets, that they've had some successful exits, and that they really have a team around them. There are some deal sponsors out there where it's a one-man show, or where they really don't have that support to be able to execute and grow. And then as far as the vetting process, we're running background checks, we're verifying their net worth and liquidity. We're getting personal guarantees signed up as well. And then, looking at credit history. So um, pretty similar to what a lender would do, right? When they're looking to lend money to an individual for purchasing a property. We're doing a lot of the similar things there. So if the sponsor, passes all our vetting, then we go into the market. So if you want to go to the next slide. Yeah. So these are some of the markets that we like, pretty much, Sun Belt and some Midwest properties, and I don't know, Texas, Oklahoma, Kansas, just to mention a few. Arkansas, we've done quite a bit there. We love South Dakota, and then the Carolinas is great. We've done deals in Georgia before, and we haven't done anything in Alabama, but possibly would look at a deal there. Um, and then we get more micro, right? Now I'm just mentioning the states, but then obviously we would dig into the actual city and even deeper from just, let's say Dallas, right? We would look at where in Dallas exactly and what are the demographics and everything that's going on there.
Yeah, and right now the fund is specifically focused on Texas and Dallas and Houston is where we're currently focused. These are all areas that we've owned in or have experience owning in, but Texas is the main focus right now.
Absolutely. Yeah, and then the last thing is the business plan. So, like Brian mentioned, we're looking at about 2 to 4 years to exit. So we want to see what that business plan looks like. We want to make sure that um, that can be executed in that time period, and that there can be, whether it's a refinance cash out or whether the property is being sold, that we can get the capital back and return it to our investors, right? We look at the underwriting. We run a lot of stress tests. I mentioned Nick Bowden, our senior analyst. Um, I mean, the underwriting he does is top notch. We go real deep. We don't want to see on the assumptions. We don't want to see somebody going super aggressive on rent growth or anything out of the ordinary. Taxes, insurance, those are big two items. We do a lot of research into what that's going to be moving forward, and make sure that it makes sense. And then, like I mentioned, as far as mitigating the risk, we do also get personal guarantees from the sponsors. We do also make sure that we have some trigger points, and can step in and have to control the property if needed. Not that that's what we're looking to do in some of this, but if that's what it comes down to, obviously we have the track record and the experience to do so. You can go to the next one there, Brian.
Yeah, and I wanted to push on that, but the underwriting too is super important. You know, that it's if you've been on some of our other webinars, our educational webinars, you know that Elevate hasn't done a deal in 2024 yet. We're almost 7 months into the year, and that's because we're staying very disciplined to our underwriting. So this passive income vehicle provides an opportunity for us to deploy capital, help investors keep money deployed, while instead of just sitting in a bank account, sitting somewhere where it's not earning interest, where it's able to be put into use into these existing assets where we're able to leverage that experience here. And this business plan is super important. We painted that capital stack, and we not only want to make sure it's conservatively our capital is protected, but even the whole capital stack is going to be able to be exited in that 2 to 4 years. That's our main goal, is to be able to come in and be able to do that, because that helps our position even more than it already is. And this business plan, all the assets that we have deployed, and we're already seeing this monthly cash flow, Elevate is self-managing that with our EREM. George talked about Tessa and Mike, having a really awesome experience where they're slowly taking over all our assets. And for the income fund specifically, part of that business plan is to put EREM, our property management arm, onto these properties where we have a lot of control over the business plan. Because sometimes, part of the problem with the business plan is some of the element is out of your control. So to mitigate that, you want to have super strong underwriting to account for worst case scenarios, and make sure that you're in a good position if the unforeseen does happen. But to really help the unforeseen not happen is have that element of control in the business plan. And that a big part of that is the property management piece, including the sponsorship team piece that George really drilled on there too.
Yeah, no, those are some good points. I mean, yeah, a lot has to do with operations right now, and making sure that uh, everything's being ran efficient and maximizing the NOI, which is something that we've been working on for years and have mastered it. So, once again, I would like to mention that this is going to be a small window. Um, so if you are interested, make sure, I think Mina put a link there in the chat. It's got more details that go straight to our portal. And then I think Brian's going to go through on how easy it is to actually sign up for the portal here in the next slide or two.
Yeah, and to that point, a big part of this is we are getting larger, a lot more momentum from larger investors, because they understand the business plan, they understand the risk mitigation. Once you get to a certain wealth position, your preservation of capital is even more important than just trying to maximize your returns. If you want to maximize your returns, you can take gambles on crypto or Nvidia, or some of these hypothetical investments where it could go to zero. But if you're in a very high ultra net worth position, your risk mitigation is super important. So some of these larger capital deployments could take up the whole investment. If we had someone come in today, and do a $5 million placement, the fund would be closed theoretically, which we are talking to some that are looking at closing out the positions. And we kind of looked at that on the different investment thesis here. So let me see, is my screen sharing? What do I got here? Let's see if this is sharing.
Yeah, that's the portal. So if somebody clicks on that link, that's where it's going to take them.
Okay, yeah, so this is direct linked to the income fund. So this is, if you're on this, Mina has put that in the chat. You can find this also at the investor portal, elevate.invportal.com. So everything that we talked about, this is preferred equity, quote unquote debt vehicle. This is interest income. This will be deployed for 2 to 4 years, 14.5% to 18% set preferred rate, depending on if you're investing at the $100,000 threshold, 500,000 or $1 million threshold. And that correlates to the half being paid current and half accrued. Right now we have it about 5.8 is our target deployment. Again, that can be taken quickly by one investor, several investors. This investment minimum, we do have a $50,000 minimum, so absolutely able to take on lower than the $100,000 investment. You know, we've had a couple that started with 50,000 and increased their investment after they started to see some of the distributions. Class B, this is the other investment one that we talked about, 500,000, $1 million. So in the portal, you'll be having access to the subscription agreement, the operation, the OA, the private placement memorandum, and this full investment summary. So you'll get this all in your investor portal. So to do that, you can just go to elevate.inbportal.com/sign up. You'll just put your basic information right here. How much you're looking to invest, you know, this is theoretical. This isn't holding anything to you. You know, so we have some investors that are deploying $100,000 a month. Some are deploying $100,000 a year. Some, you know, more than that, and some less. If you're an accredited investor by the SEC definition, that is right here. We will want to get accreditation verification from either your CPA or a free website that we recommend. That's all in your portal. This is pretty easy to verify, and you should know if you're making $200,000 or more, if you have $1 million net worth, or if you're married, $300,000. So you create this account. I already have an account, so I'll just take you to my investor account. Again, anything that I'm offering to investors, I am investing also personally in the same position that you're in. So I will be sitting there right alongside of you. This is the dashboard. We really like this investor portal a lot. You'll be able to see all your different investments. These are all the ones that I've invested in. You'll be able to get your updates, your tax documents. You can contact us through here, although I would just recommend contacting us directly. But great portal. So you'll go here. You'll want to view these documents that I just talked about: the subscription agreement, the OA, PPM, summary we just went over. You can invest through an IRA, which is great. We can put you in touch with our representative at Quest Trust. He's been super helpful for our investors who are investing in their 401k and IRA. This particular fund is a great vehicle if you are investing in your IRA, because it is treated as interest income versus a normal syndication where you're already being protected in your 401k. So if you have those, we can definitely help you out on a self-directed IRA. LLC, if you'd like. Some people have specific LLCs for their investing. I personally used to invest as an individual. I'm now investing under my family trust. But you'll create your account here, all your information, how you would like distributions. ACH can take 7 to 10 business days, but this is the easiest one. You'll put your bank account information in there and set that up. So I'll go ahead and put my investing as Class A. I'll just do $50,000 here for the minimum. So you can do this at a later time, but this is what I was talking about right here. Parallel markets. You'll upload your W-2s or your statements. It is fully verified there, very protected. This is what I did. You can also, if you'd rather not upload that to the secure website, you can send your letter to your CPA based if you qualify from income or if you qualify based on net worth. So this drive will take you. This is just a letter that you can send to your CPA to sign off on. Sometimes CPAs, they move kind of slow. You know, no offense to our CPAs that are on the call. So I would do this in the same process while we just need this at some point, you know, you can still sign your documents and set up everything else, just knowing that if this is coming, you should know if you meet these accreditation definitions, but we will need the verification at some point. So for now, I'm going to do just that, skip and continue. I will sign my documents. Everything is available for e-sign. This will take me through the operating agreement and the PPM. Fastest loads. Okay. So this is more details about everything that we talked about, the structure of the deal, risks of the deal. So we want to review that, but this will take you to e-sign. You can do everything electronically. You don't need to print out anything. So this can all be done through here. Go ahead and skip. This is if I'm going to ACH, an easier way is to wire it. These are the wire instructions to send the funds. So your investment starts once we receive the funds, not once you sign the document. So as soon as we receive the funds, that's when your investment will start accruing. So wiring it is the quickest way, for those who are trying to get in by the end of this month and want to start getting those distributions by next month. This is the quickest way to achieve that. Just because the ACH can take 7 to 10 business days. So yeah, that's how this is the investor portal. That's how you sign up. And you can get incorporated into the fund as a limited partner, and how you fund it.
Yeah, so just a few things there. I mean, literally just takes a couple minutes, depending on how long you take to review the documents, but pretty simple process. And as long as you get your funds in before the end of the month, you will receive interest for that full month. So that's a little nice incentive for you to get it done and in the fund before the end of the month. If you've got any questions, like I mentioned earlier, we'd like to make sure we get everybody's questions answered. We've got a couple here, frequently asked questions that we can go through, but if you have any others, please go ahead and post it. Brian, you want to run through these?
Yeah. So when do we start receiving cash flow distributions? I think we hammered that pretty well. Monthly, beginning the first month. I really love that about this vehicle. People that are looking to replace certain expenses, whether that's their car expense, home expense, even their income. You're just dividing whatever your current rate of return is by the amount you're investing or how much you're looking to get in monthly cash flow. So that's just great. I still love syndications, but syndications aren't as cash flow heavy. More upside on the back end with that additional risk. What happens if the deal sells or gets refinanced in year 2 or 3? It depends on the assets that are in the vehicle. We have 3 assets in the vehicle right now. Probably won't add any more, but we as a fund managers have the discretion on whether to keep that rolling or go ahead and exit the fund. So our goal is to get your capital back out as soon as possible so you can reinvest with us, also because we're invested in it personally. Again, why it's super important to have good sponsors on whether you're investing with us or not, the sponsorship is super important, and also why we are, taking that sponsorship role on these funds that are being invested. If the entity does not pay, all of these are coming with personal guarantees. So we talked about the positioning in the capital stack, but an additional layer of protection or insurance is the personal guarantees that are coming with this. Part of that which we're participating in. So we feel very strongly about this investment vehicle, but we could take full take over the asset fully and become the managing member. That is not our goal, and our underwriting is there to support that. So our underwriting and our thesis business plan is not even to get to this position, but again, you want to protect your downside. So Elevate is, again, we're not paid until the fund is fully deployed and fully exited. You know, if we do achieve those returns, then we can make the spread above the return on the investment. So that is, we are paid on the back end here. So very high alignment with our investors on this. How safe is the investment? I think we talked a lot about the risk mitigation here, the position in the capital stack, personal guarantees, the sponsorship team, the market, the assets that we're all investing in, all super important. But no investment is risk-free, no matter what you're investing in. Obviously, some investments are more risky than others, but we feel very good about our capital placement and capital stack on these deals. So these are some of the common questions that we've got from our current investors and prospective investors on the deal. Let's see here. Yeah, these are the most common questions. Some of more questions that I have received are on this timeline. If you're investing, I would plan on having it deployed for 4 years. We very well could exit you in 2 years or 3 years. Shorter really depends on what the market is going to do. You know, here we're sitting in June. They said interest rates were going to decrease. I think they've said that since the beginning of the year. We haven't seen interest rates come down quite yet. So we'll see what the market does, but we're investing on what today's market is. So we're not betting on the future or betting on any sort of market corrections to happen. We're investing based on the market today. So I would plan on that 2 to 4 year window.
Question that came in, Brian, which is, what is the flexibility for the investor to exit early? I think you kind of answered that a little bit. As far as if the investor wants to exit before the fund is complete and dissolved, there's really not an option for that. You know, it's once you place the funds in, like Brian said, you know, expect that 4 years, and it might be earlier, but as far as pulling your money out early, we don't have an option for that.
Yeah, plan on, once you have your money out, I would plan on having it for 4 years, unless you had another investor come in and take over your position. If you invested $500,000 and you had another friend that wanted to take over your 500, they would have to then place that. But you know, that's pretty hard and complicated to do, but theoretically we could do that. But I would plan on not touching that initial capital until for that time, but you will be getting that monthly cash flow. So you'll, as soon as you start investing, you will start to be getting some of that money right back to you.
Yeah, so I think Mina's gone ahead and put his contact information in the chat in case you have some other questions that come up, or if you want to reach out and schedule a time to discuss further. His phone number and email's there. You've got the link to the portal. Like we said, you know, we do suggest that if you're ready to move forward, go ahead and reserve that spot. This fund could be filling up anytime soon, so the sooner you do that, the better. If anybody's got any other questions, you know, I would say this is the last call. Go ahead and put it in there if you do. If not, reach out to us. Brian, Mina, I'm not sure if you guys have anything else to add.
Yeah, it's great. I'm glad you guys joined us today. Everybody watching the live stream to the Facebook group, we've got 9,000 people on the in our Facebook group. So great great group to be involved in. You guys feel free to ask us questions in there anytime you want. That group we're growing. It's a large group. So feel free to jump in there. Looks like we got a couple people on this call. And yes, there was another one that we will be sending the recording will actually be in our Facebook group. And if you registered here, if you're on Zoom, you'll be sent the replay by Mina. You can also get that recording in the Facebook group.
I'll go ahead
Awesome.
and put the
Oh yeah.
here. Let me put the link to the Facebook group if that way they don't have to wait for us to send the recording as well. All right, there it is. So you got the link to our Facebook group and the recording's already up there. You can watch it at any time. Okay, anything else?
That's it for me.
All right, thank you all for joining us and looking forward to having you as investors. Thank
Have a
you.
good day, everybody.